Welcome to the mutual fund series. In this video, I'm going to be talking about the various types of ETFs and how do you actually get around to choosing an ETF that's going to fit your portfolio. When we look at the various ETFs available, first off, you have the broad-based market ETFs. So for example, the ETFs that track broad-based indices like, for example, Nifty 50, Sensex, the mid-cap index, various other ETFs that track market capitalization-based indices. You also have sector ETFs that track particular sectors, for example, IT, banking, pharmaceutical. And you also have thematic-based ETFs which track various themes, for example, ESG or consumption or healthcare. Then you have the factor-based ETFs. These use various factors to assign weightages to the stock. So they don't buy the stocks in the same weightage as is in the index. There are various factors that are applied to decide the weightages to be applied to various stocks. And you have various factors like value, momentum, low volatility, etc. Finally, on the equity side, there are international ETFs that are available that track various indices like S&P 500, NASDAQ, you have China-based funds, and you have global ETFs as well. On the debt side, also, there are ETFs. For example, these days you would be hearing a lot about these target maturity funds. Do check out the video that we had done on target maturity funds earlier. So these funds typically invest in state development loans and corporate bonds as well. Apart from these, you also have liquid ETFs and gilt ETFs available as well. With so many ETFs available, how do you decide which one to choose? The first thing to always check is what is your investment horizon and the risk-taking ability. Clearly, if you have a long-term investment horizon and you can take risk, you can go for equity ETFs. But if you're looking at shorter-term investments, you might want to look at the debt ETFs. Now, irrespective of whether you look at debt or equity ETFs, what are some of the factors you need to consider when you are evaluating various schemes? Firstly, where specific ETFs are concerned, always compare schemes of the same category of ETFs together. For example, you would need to evaluate schemes of ETFs tracking Nifty 50 together and do not compare Nifty 50 with, let's say, a mid-cap index or even with the Sensex. Similarly, when you are comparing debt schemes, always look at schemes within the same category. Secondly, it's very important to see what is the expense ratio and the tracking error. They are interlinked. Higher expense ratios, as I had mentioned earlier, do tend to increase the tracking errors. You clearly want to have a fund where the tracking error is going to be low. You also need to see what is the liquidity that is available in these ETFs, for which you can look at the last 3 months traded volumes. You can also check out what is the difference between the market price and between the NAV of the ETFs. If you find funds where there is a huge difference, then these are funds that you really need to stay away from. On the international side, well, it's not necessary to have an allocation to an international fund. At best, it's a tactical allocation and you need to limit it there. Now, within the various geographies that are available, I would say it's better to just stick with a US oriented or a global index fund. I really wouldn't look at China or Europe because I think these are going to be more concentrated exposures. Also, US in any case makes 65% of world market cap. So I would say look at US indices or look at the global indices. Be aware of the difference in the taxation on international ETFs and the fact that they could be currency risk as well. So summing up, when you are considering an ETF, as I mentioned, it needs to be as per your goal and as per your risk. Stay away from NFOs. You'd rather wait for checking the tracking error and the traded volumes before jumping into these NFOs. Always look at the expense ratio and the tracking error to evaluate existing ETFs. And finally, stay away from sector and thematic ETFs. Also, on the debt side, if you are looking at target maturity funds, they need to really tie in with your investment horizon. Do click on the bell icon to subscribe. We do look forward to your feedback. Till then, bye-bye.